Hello friends, welcome to my channel and thanks for watching this video. Friends, as we have entered with or ended rather with one more very interesting as well as very important week and officially entered into April 2023. There are lots of things which has happened, which are happening, and it's important to discuss most of it, if not all. So let us discuss each and everything in this weekly session of USA Weekly Market Report series, where we are going to analyze, and we have always analyzed the most important things and try to give you the gist of everything which culminates into your profit. So let us see what has happened and what is happening or what will probably happen in the upcoming week. But before that, if you haven't yet subscribed my channel yet, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Okay, so the first headline, I'm not going to talk about company specific. You can see, but what's important is it's the US, not Europe banking system that's a concern. Top economist says. Now, I'm not going to deep dive into the press release, but the one thing which I want to say here is, now in the last 1 week or 10 days we haven't heard anything new. But does it mean that the banking crisis has just gone like a miracle? No, it's not. And we probably don't know what's coming next. So for that to understand, we need to understand one more important data. Let me show it to you. So this is the US PMI, and you can clearly see, I mean, although it is now closed at 6, which is less than 6%, but you can clearly see it's been stuck for the last 2 months. It's been stuck at 6%. So if it continues to trade at or above 6%, and the kind of hawkish statement the Fed members are still giving, I mean, the last press release was classic. I've just listened 5-10 minutes of Jerome Powell, and it's like how the kind of audacity he has. I'm not saying in a negative way, I'm definitely saying this in a very positive way. I mean, he was consistently stick with the term called 2%. I mean, if this is the kind of tone they have, and if they are actually working on this, believe me, they will the economy will deep dive into a recession. There is no other way, because by every 25 basis point, 50 basis point, or 100 basis points, it does not matter. What does matter is they are increasing, and it has the cumulative impact of interest rate hike will definitely happen on the economy, and that's what you need to understand, and that's what I'm trying to say over here. So it doesn't matter. I mean, 6% is way above than, I mean, it is 200% more than the actual or the target inflation rate which the US Fed is talking about. So there is a lot to be done. I mean, obviously, if this is what they actually mean, what they are saying and what they are doing, then economy will definitely end up going into a recession. But bond market is telling you a completely different story. It has already started factoring in. So, and meanwhile, this transition period, I mean, as far as my view is concerned, the overall economy or stock market is in a transition phase where everything will start falling. We are talking about bond yield, you will talk about dollar index, you will talk about the equity market, everything, or crypto market, everything will start falling. The transition period does not go with simple logics, where when the dollar index and bond yield started falling, you will see that equity market started rising. This does not happen. I mean, there are some phases, that gridlock phase where everything will start falling before it stabilizes, and then everything normalizes and the normal moves happen. Okay, so this is something which we need to understand. So I still feel that there is some more to be come out, and it will happen very soon. So let's hope for the best, not for the worst. Now, Italy curbs ChatGPT start probe over privacy concerns. Now, privacy is a very small term, because any technology kickstart, it's very hard, or I would rather say it's next to impossible. I mean, to deal with that, because this AI tools are very easy and simple to use. And let me tell you one thing, now it is something written, and it is very clear that it has been written on the wall that most of the jobs will be gone. That's very, because the kind of things which we have seen, and it's very good for the stock market participants. If you are an investor, it's very good. If you are a job seeker, then it's a very bad news for you, because at the end of the day, company will find ways to boost their profitability along with their revenue. Okay, and this is one of the tools which they have got. And even if it is not available for the normal people, it is going to be available for the company, because that's their wish to increase their profit. So it's very good if you are a shareholder, stockholder. But if you are not, if you are not an investor, and if you are a job seeker, then it's very bad for a job seeking community or overall for the economy. I mean, let's see, for the next 5 years you will see huge amount of change, drastic change that is about to be seen. Okay, what else we have here? Yeah, we are going to talk about the stock market, each and every bit. Now this geopolitical crisis, I would say the next 1 year before, because 2024 will also be an election year for United States of America, and the kind of news are coming out, I mean, it's going to be very, very news heavy and I would say land up into lots of controversies before the presidential elections happen. Okay, apart from that, uh, let us see what else do we have here. We have talked about the inflation, and yeah, I think this is most of it. And when market started moving higher, forget about the logic, and that's what we have seen. So we will see very less uh, important news pieces, because everything will move off. As you can see, I mean, there has been a huge change. If you are looking at, probably it is not indicating something, there is some error for S&P 500. But Dow Jones up by 415 points, NASDAQ up by 200 points, oil is also moving higher, 75.7, gold is very near to the top, the bond yield started falling, and 10-year yield is now trading at 3.4. The VIX is now trading below 20, but if it settles below 15, I would say that would be a very good thing to look at. Now, yeah, there is a certain amount of increase if you're looking at the 6-month yield. I mean, this section I'm talking about from 1 month to 1 year, because although it has been falling for the last 2 or 3 weeks, but it is very near to the top. It's not like the 2 year. I mean, from 5.5%, it is now trading at 4%, and it is actually recovered from 3.5 to 3.7 to 4%. The bond yields have actually recovered. So I mean, things turns very volatile. Yeah, US dollar index, I have a firm view. If US dollar index trades below 103, then it is in a downtrend, otherwise it will be in an uptrend. So the logic is very simple over here, and I am following the same. Apart from that, let us see what is happening as far as the charts, or what the chart is saying. So this is what we can see as far as yeah, this is the first chart. So the Dow Jones, I mean, now understand one thing, there are very, very important things which are happening right now, and let me tell you one thing very, very clearly. Even though there is a bounce back that has started, but it's very important for the Dow Jones to surpass and sustain above 34,598 or 34,600 to be precise, because if it hits the upper end of the range and started falling again, let me tell you, next time it won't stop at 31 or 32,000. Let's be very, very sure about that. And it's very important for the Dow Jones to perform over here. So the recent high, or recent low rather, is was in between 31,400 and 31,660 or 670, and then we can clearly see a bounce back that has started. But on the upside, we have 34,277 and 34,600, as far as the two big resistance are concerned, and it is a must for the Dow Jones to sustain above 34,600 and perform above that. If it does not happen, then it will be a trend failure and it will obviously start falling, but next time it won't stop at 31,400. That's what I'm trying to say over here. Talking about the NASDAQ, obviously NASDAQ is the best performer right now comparatively, and if you are looking at the price chart of NASDAQ, it is very near to its next breakout, because the first breakout has already happened above 11,550 or 11,600. Let me show it to you. Yeah, so here we are, 11,000 somewhere near, yeah, 11,550, and now it is very near to its next breakout, which is at 12,295 or 12,300. Once NASDAQ started trading above 12,300, it will officially move towards 13,189 or 13,190. Okay, so this is what one should look at for NASDAQ. So for NASDAQ as well, there is a big bounce back which is on the card. So for the next 1 week, even if you are looking Dow Jones or S&P, Dow Jones or NASDAQ, you can clearly see some bounce back. But what I have said for Dow Jones and the same thing for the NASDAQ, it has to perform beyond its resistance level. So it has to perform. If it does not, then obviously it's gonna cause the trend a lot, because obviously a bull market climbs the wall of worry, but this time if they increase rates the way like the Fed does, so next time, then obviously the stock market will start crumble, because we have seen that there are institutions which has already started crumbling, and they are the banks. And when banks are in trouble, it does not matter, each and everything will follow the soon. So any further increase in inflation interest rate, will cause everything a lot. As far as S&P 500 is concerned, we have our very near term target, which is 4180 and 4200, and the extended target will expand up to 4330 or 4350. So for the next 1 week, bounce back will be there on the card as far as equity indices are concerned. But understand one thing, it's not about the next 1 week. What will happen after the resistance, or whether there will be a breakout and a sustainability in all the major indices, that's what I'm trying to say, and that's what one should look at. But for the next 1 week, there is a clear cut indication of a bounce back. Now what will be the bounce back, how much does each and every indices move, where they will sustain, all these questions will be there, but that we will see in the next week's video. For the upcoming week, it will be a bounce back. Yeah, so the next one will be the dollar index, and dollar index already started falling. Now the kind of fall we have seen was indeed quite big, but then again there is a trend. Let me show it to you. There is a small range formation which has been, you can clearly see. Okay, so you can clearly see this small range. Now if it is because it is happening after a big slide, so it is just, I would say, for the time being, it is just trading in between a range, but it does not give you any positive feeling. Okay, the overall trend is obviously negative, but for a short period of time, if dollar index continues to sustain above 102, then the next bounce back will push dollar index in between 106 and 107, or in between 106 and 108. So there will be a bounce back like this. So even in a downside, any financial instrument will go sideways or will give you a bounce back, whether it is a dead cat bounce or a cat which is alive. It does not matter. So what we can see is a bounce back like this, and it looks like there will be a bounce back in the next or in the upcoming week. So I mean, that's where the the controversy lies. At the same time, I'm saying that equity indices will go higher, and then same with the dollar index. In normal circumstances, uh, things like this does not happen. But as I told you, we are going through a transition phase. Everything will go in the same direction, and one should not scratch their head on this kind of events or this kind of news. Yeah, and apart from that, I want to talk about the WTI crude, and just go to the hourly chart, and then you can see the move. I mean, if you want a trade, the last week trade was the crude. I mean, phenomenal. You can clearly see in the last 11 days WTI crude has actually increased by 17.5%. So this is rather a big increase that has happened. And not only that, the way WTI has been trading for the last 2 weeks, and the kind of positioning we have for WTI, even from this position or from this level, is very important, because it looks like it has entered into, it's obviously entered into its previous range, and now it will move towards the upper end of the range. Okay, you can clearly see. So your previous range or recent range has definitely get activated, and now what we are going to see over here. So on the downside we have 73.89. I mean, this is crude oil WTI futures. So this is not a spot price, this is a futures price. So what we have seen, 73.89 and 72.31 as far as the lower end of the range is concerned, and simultaneously the target has now opened up for $80 and $82 or 82.5 on the upside for WTI crude futures. Now across the market you can clearly see a big and sharp short squeeze, and that's what is going to be the theme for the next 1 week as well. So be prepared for a short squeeze, but the important thing will be what lies afterwards is a very important thing, and that's what we need to focus on, because one single bad news and things will turn into a dime, and I mean, you will see a clear shift, and that's where the fear lies. Okay, because valuation is not at all to that lowermost level, number one. Number two, I mean, it's not about the inflation. Okay, it's all about the narrative. It's not about the inflation, but the kind of target the US Fed has saved for themselves was not normal. And in this kind of scenario, I mean, yes, if the crisis between Russia and Ukraine solved, the inflation will fall drastically. No one need to do anything, because they are the world's two most largest exporters, and food inflation has peaked, and everything is linked with food and energy, and they are one of the leading exporters across the globe. If you're talking about Ukraine is the wheat basket, obviously we know, and we also know that Russia is the energy supplier before things turns south. I mean, in the last 1.5 years. But if things normalizes, if these two countries normalizes, and if things normalizes, then obviously, I mean, from both the side, I'm not in the camp he's bad or she's bad. I'm not in that camp. Both from both sides sanity must prevail, and if things normalizes, then obviously you will see a huge downside as far as inflation is concerned, and Fed need not to do anything for that. So I mean, and last time they have literally, I mean, if you just listen the commentary by Jerome Powell, he was completely in a script mode. He has some script, and he was just reading, and he was not tampering with his words. And I mean, they have literally taken the responsibility on and he specifically said that it's the monetary policies, and beyond a certain point monetary policies does not work. It will actually kill the banks or kill the economy. Monetary policy is a very dangerous tool, and it has to be, it will give you a good result when fiscal policies work accordingly. On one side, you are just pumping money on another side, you are just increasing the rates, interest rate. That's not going to work. Everybody knows that the Fed indirectly start pumping the money into the banks. It has an impact. It will definitely have an impact. You can't say that because it's a necessary, so we can't call it as a QE. But at the end of the day, you are pumping the money. So what difference does it makes? Anyways, for the next 1 week, we will definitely see a short squeeze in the overall market, and enjoy for the next 1 week. But think about the overall trend after that short squeeze. So this is the end of the video. Thanks for watching.